The Federal Reserve concluded its policy meeting yesterday, cutting its benchmark rate by a half a percentage point to a range of 4.25% to 5%. CBS News business analyst Jill Schlesinger is here to tell us what happened and what to expect in the coming months. Jill, why did the Fed decide to cut by half a point, not a quarter of a point, do you think?
Well, Fed Chair Powell said that when prices surged after COVID, the primary focus of the central bank was to bring down inflation. Now that the inflation rate has started to cool and move towards where the Fed wants it to be, there is some signs that the labor market has weakened. And so that's why the Fed is shifting their focus towards pushing down interest rates so that the economy doesn't soften too much. They said they wanted to get, this is a great quote, a good, strong start with a half of a percentage point. He did go out of his way to underscore time and time again during that press conference that the economy is in solid shape, that there is no sign of any real deterioration overall, but they want to get ahead of the labor market weakening.
All right. How about any idea about future rate cuts?
You know, the Fed makes projections at every other meeting. And in the projections yesterday, the Federal Reserve officials anticipate an additional half of a percentage point cut by the end of the year. So it might be 1/2 point or 2/4. And then probably they're going to get to another 1.5% or 2% of cuts over the next 2 years. Now, none of this is set in stone, of course. If the economy starts to wobble, the Fed may front load the cuts. And by the way, if inflation proves to be a little stickier, not come down as fast as the Fed wants, they could go slower with those rate cuts.
All right. And you were saying the overall economy, it didn't look, terrible. So the Fed is not seeing a recession anytime soon.
Not at all. And, we've always been talking in the last year or so about this sort of soft landing, meaning that the Fed had to increase interest rates in order to fight inflation. And if they can bring down that inflation rate without causing a recession, that's what's called a soft landing. I know we're all gripped by fears of an imminent recession anytime we have data that says something that's awful, right? But right now, if you look at the numbers, we are seeing a gradual slowing, but not falling off a cliff. In other words, I think that the Fed may have lucked itself into a soft landing, and I really believe that this is something that will be the legacy of the Powell Fed if they are able to do it.
All right, Jill, thank you so much. Great to see you.
Great to see you, too. Thank you.
And you can see Jill regularly on CBS Mornings and CBS Evening News with Norah O'Donnell. For more analysis, go to JillOnMoney.com.